this video, let's learn the importance of pre-market support and resistance zones. What's going on, everybody? We are back with TradeUI, and in this video we're going to show you the importance of a day trader's pre-market support and pre-market resistance zones when it comes to trading. The reason that these lines are so important is because for day traders, we want to be in and out of positions within a few minutes. So we need to identify the most sensitive pivot points in a stock based on how the market's moving. But day traders also need to have a little bit of volume, and you shouldn't be trading anything that doesn't have volume pre-market, because what happens when you have pre-market volume, that trading volume tends to keep on accumulating throughout the first couple hours of the trading day. So what I want to do is actually show you over here where you can use bar charts to identify pre-market movers, and this is a quick list that day traders can identify to find potential movers. So what I have here is the gap up stocks for the bar chart site. So remember, when you're gapping up, you're getting the edge of you're expecting a bull run to continue. Gap downs, vice versa, you're expecting the price to continue, vice versa, going down. However, we just want to use this to identify some high volume pre-market activity. And as I can see, the top couple of stops is MLGO, CORZ, ANNX, and NVDA. So these are a couple of stocks that I have listed here. And what you want to do is you want to go through here and figure out, is there anything else with a little bit of volume that had some gap movement that sticks out? And going through here, I'm not seeing anything else except NVIDIA, MLGO, CORZ, and ANNX. All the volume had at least 1 million volume. And when I go over to my other charts, I'm going to show you just how we can utilize those pre-market support and resistance zones to determine how the trading might work out for the rest of the day. So over here, I actually have the pre-market data set up for ANNX and NVDA. So the first thing you want to do is, imagine this is 9:30, the bell's about to ring, but we don't know what we want to do on trading. Well, we need to pinpoint what's a rough support and resistance zone for these stocks. So me just looking, I'm seeing a lot of rejection over here at the $7 level for ANNX. And you could get a little more conservative and say it's really right here. And the reason we're doing right here is because we touched it here, touched it here. We popped past it a couple times right here and here. But this area has identified as clear rejection. And as you can see, a majority of the price, when it gets close to 7, it stays under 7. So let's go ahead and identify 7 as well. And I'm going to draw like basically a box. So we want to see a potential entry or exit based on how the box is traded right here. However, understand that that's your resistance, but you need to see if there's any support. And what you want to notice is the opening drive in the pre-market. You see we opened right here, and we see we had a low of $4 a share. But what I see is I see some pivoting right here. And the reason I'm identifying the $6 mark is because we popped up, we came back and almost tested that level. Then right there in this part of the day, once the early morning happens, you see some consolidation reflecting around the 6. There's no clear definition. If you really want to get exact, what you can do is you can get your arrow key here, and you could target these two lows here. So a good rule of thumb is reference a pullback on your opening drive in the pre-market, or sorry, post-market technically. You want to focus on a pullback on the opening drive, and then you want to see where does this pullback correlate with the lows early in the trade day, like 5 a.m. to 6 a.m. And that gives you a rough range to target for potential exit or potential sell short to down here. So you want to buy it if it bounces off this line, and you want to sell it if it bounces to the downside on this line. Just depends on how the chart reacts. So now let's try to zoom throughout the trading day to see what happens. I'm going to zoom in here. So this is the support zone we're at. And as you can see, the price originally pops up pretty hard, but we don't want to touch it until it gets to one of the pre-market support and resistance lines that we drew. So as I go through and zoom out, you can see that we tested this 580 level. We actually touched it right here, and we had a clear confirmation here that this is a solid level. So you could have got in around that $6 mark. And as you can see, it was gap up, so we're expecting a bullish bias. and you could have bought, and look how it actually went up to that $7 range and started to reject. Right out the gate, literally at 9:33, you could have got in on a trade on a pullback. You could have had a tight stop loss, which is this zone here. So if this candle would have closed well below it, you could have cut your losses, or you could have waited for a close confirmation, traded on this candle, and as you can see, the price ran all the way to $7. That's a dollar move in only, what is that? Not even 10 minutes, you could have made $1 per share on a small stock. You could have made a tremendous gain. But look how powerful these lines work, because now you have identified a clear rejection. You know, we had a rejection here. We tested it again, came back, almost tested it, and then you can see that that was a clear breakdown to the downside, going back to that 580 level again, where you could have made another $1 a share shorting this stock within the first 30 minutes of the trading day. But don't just rely on the minute chart, okay? Let's look at the 5-minute chart and really see how this played out. So understand the 5-minute chart confirmation is very important as well. Early in the morning, it's really hard, especially for big pops like this that happen within 5 minutes. You're not going to capture the whole move every time. But we were easily able to identify where our support zone was here, as well as where our resistance zone was here. We got our confirmation on the 5-minute candle here, saying you could have made a big profit right here on this move, seeing this rejection off the $5.80 mark. And as you can see, throughout the trading day, this zone actually held up as a good resistance zone, good support zone. Because we came back and tested again here, here, and here. You know, we say we got close to that zone. We didn't touch it exactly, but the second you started seeing price reverse when we got close to that zone, you could have taken trades and made another 20 cents per share on the trade. However, what we noticed at TradeUI is the first 30 minutes to an hour of the trading day is going to be when it's the most reactive. But now let's look at NVIDIA, and let's look at this perspective over here. So whenever I go to my drawing tools, NVIDIA is clear to identify that we had a resistance zone right here at 1156. And you also want to mark, because remember the stock is right here at the close of the previous day. This zone here, this 1150, is a zone that you want to identify because we touched with these wicks and immediately rejected. Then it became resistance closer to the opening bell. But remember, we pulled up, pulled back, touched again. This is clear. And then during the early days between 5 and 8, you had some testing right here that was rejected. But we want to identify where the downside trade was. And as you can see, we had a low all the way down of 1132, but you want to start seeing where there's some consolidation. So you could argue that it's this right here, and you could argue that your downside's right here. So right out the gate, we know that if the stock rejects this line, we should buy targeting 1156. If the stock opens above 1156, we should look to buy. Vice versa, if the stock closes below 1156, we should look to sell in our hands till we test this level. Because remember, these are gap up strategies, all right? We're not looking to sell on a gap up. We're looking to buy on a gap up because we're expecting that momentum to keep going. And if we zoom out throughout the trading day, you can see exactly how this played out. So, understand how important these zones were throughout the trading day. We like to focus on the first 30 minutes of the trading day, so if I zoom in right here, get it a little bigger, you can see that out the gate, we had this first red candle we broke down. Immediately breaking down in red, I'm thinking I need to be skeptical about buying right here. I want to see a big green candle, then a little pullback. Well, as you can see, we popped down, and there was a little too much throughout the open. I would have been waiting for a buy zone right here. Didn't quite get there. But something I do want to show you is, after this breakout here, you could have bought here, and you could have scalped and made a couple bucks a share on this big wick move here. But realistically, that happening is slim to none. You want to wait for a confirmation. So it would have took a small loss out the open if you would have bought here on this close and then stopped out as soon as you crossed under this line at 1155. You would have lost $1 a share. But look how we came back and we got close to that 1146 zone where we could look for buying opportunities and we could have rode right back up to our resistance zone. Now, the real thing is this going to be accurate to the T every single time? Absolutely not. What these pre-market support and resistance zones are, they're zones. They're not going to be accurate to a cent. However, you can use them to gauge a good entry or exit, and that comes down to proper money management on how you handle your trades. Understand that in the early mornings, there can be a lot of volatility. So you may want to rely on some other indications such as why did the stock gap up or gap down. Maybe if you're someone who doesn't like to trade big volatility, you might find a gap that's not above that 10% mark, but probably a gap that's closer to 1 to 2%, might show a little more stability in the opening few hours. But understand that these zones do work all day long. Because if we go back and we look at how the trade happened the rest of the day for NVIDIA, look how our pre-market resistance, after we had a clear breakout, look how that acted as support throughout the rest of the trading day. Right here, you could have bought at 1156 and then profited here. And it came back, tested again, immediately rejected, and kept going higher. So this previous resistance became a new support. Look how throughout the trading day, a support zone we drew acted as a resistance after we had a clear breakdown. And once we broke back up, look how it acted as a new support zone. So throughout the trading day, you can get a lot of great information just on those pre-market lines to give yourself that trading edge. But guys, don't just use those lines. Figure out where your support zones are on the bigger time frame as well. Learn how to combine those together with this, and you'll become a better day trader every time you practice this simple strategy. But guys, really hope you enjoyed this video. Don't forget that we have TradeUI you can access in the link below, where you can back test your own strategies to figure out what indicators work best with what stocks. We also have option flow data and insider trading information you can get a hold of. Don't forget that we have tons of videos on this channel that will give yourself a trading edge, and it just takes one video at a time to make yourself a better trader. So check us out, like these videos, and subscribe.